Hey, what's going on, ladies and gentlemen? Welcome back to the XForceGlobal channel. Today, we're going to be continuing the development of the price action from our previous videos. Nothing really has changed too much other than this current price action that we're seeing here with a lot of overlap, so we'll discuss this. But the overall idea is that we're still having a protected low here of a higher degree wave 4 that terminated here, and we're still working for a larger primary wave 5 of the higher macro degree to the upside. So what that means is here on the local structure, we have the primary wave 1, 2 being completed here as either the running flat idea, where the wave C doesn't terminate beyond the point of wave A. Now, this is a rare structure in characteristic of how these flats play out. And then we also have the more common idea of the expanded flat where the wave C terminates beyond the termination point of wave A. So either these two ideas are still currently being in play, and we may be complete for the running flat, which is at peak validation, by the way, where it is now being completed here as a possible diagonal variation, ending variation for this wave C. Now, these are very common. I've discussed this in my previous videos where we do usually see common characteristics of diagonals being played out here for wave Cs within flats. Those are usually very characteristic, especially if you start to see the momentum indicators starting to show some kind of divergences being created, where we had an extreme low here, and then we start creating momentum indicators that people may be interested in buying these at these levels. So we're still being supported at the 100% level when taking the Fibonacci extension, or the trend-based Fibonacci extension rather, for this wave C against this partner leg wave A. So if we take the pivot of this point here to the wave A and B, we get this extension target of 100%, and we're still being kind of going back and forth within these regions here within this green box. So there's still some support within these levels, or at least some levels of interest of a possible bounce. But again, we do have the possibility of extending our diagonal even further, and you can see by these dotted blue lines. So with a lot of these overlapping structures, it is difficult to really find what this diagonal is going to be playing out, or how it's going to be playing out, especially that we do have the possibility of an expanded flat. So this idea still remains true and is still in progress, but this idea just has the best look in terms of how we can be looking for more possible upside. Now, this wave 1, if we're seeing this as a possible ABC to the upside, can be a WXY to the upside, where this wave X is working in the similar type of transitional flat idea to the upside, where we still come back up to these levels here. But I don't agree with that idea personally, so I'm still sticking to the idea of a primary wave 1, 2 being completed. So we're still working in this zone here. The main idea is that the momentum indicators are starting to show some bullish divergences. So we may get actually a possible pump out of these regions here. But again, if we do decide to come back down and extend our diagonal a little bit further, and we do work in a more corrective manner to the downside still, we're still going to be working in the possible idea of the expanded flat, where this yellow box is going to be another area of support before we move to the upside. So no real problems there in terms of the actual validation of the flat. Now, whether you disagree or not, the flat idea is a possible pattern. That's completely up to you. But again, I've already mentioned that personal bias and market psychology is an extremely important aspect of how I see the markets against a lot of other people as Elliotticians. Because one common mistake that a lot of people do is that they assume as Elliotticians that the general markets see how the patterns are being played out against their personal bias. Meaning that for me, I don't agree with that. I'm a contrarian, and I believe that we should be seeing and pinpointing how the general markets see the markets, and use those observations and those specific termination points on how those lower highs and higher highs and so forth are being created, and then we work upon those and then apply the Elliott Wave Theory on top of that, not the other way around, where a lot of people are assuming that the general markets see how we see the market. That's just not how I personally see it. So that's just how I've been more successful as an Elliott Wave trader. And right now we are having a pretty good contender for this wave 4 still being in play, because we're still being supported above it, and we had a 30% bounce off of those lows. So that's the first variation. Now the second variation is more of the subjective idea. Since our last video, it's been getting quite a bit of traction because a lot of people don't agree with the possible expanded variation of this leading diagonal. I think it's absolutely fine as long as it's valid. Also, again, it goes back to the point of, are you willing to take the idea of this being a more rare pattern on the micro timeframes and betting against the larger timeframes, where we do have a possible wave 4 on the bottom? Because that's the only two variations that's pretty much left or resorted down to, unless you're extending your wave 4 for another wave Y to the downside, which I don't agree with. So I'm resorted down to the idea that if we're seeing this as a 1, 2, 3, 4, and then we have the termination of wave 4, those two ideas of the flat idea or this leading diagonal expanded variation is going to be in play. Now, we originally thought this was going to be a contracting variation, but that didn't play out. But we are still moving extremely corrective. So this is where I do agree with a lot of people. This is a hybrid idea, basically, where we are seeing this move off the lows as a three-wave move and a three-way move here, respectively, all the way up to the subwave 3. And again, respectively, we are also seeing a pretty corrective nature, not impulsive nature. Although this move here was impulsive, a lot of these overlaps here are still indicating that this may be a support level where this move alone, although market inefficiencies do exist, I do believe that this can be also a corrective move, which means that this may be the bottom of a possible subwave 4. Now, the entire invalidation of the leading expanding diagonal is going to be this previous subwave 2 termination. So if it's valid, it is absolutely valid. Also, we've been getting a lot of people who do not understand or not up to date to the new Elliott Wave rules. It is absolutely fine. We have seen enough of these observations for the actual Elliott Wave principle to make updates within the book saying that we do not have any wave relationship with wave 1 to other wave relationships in terms of how long could this wave 1 be. So it doesn't matter how long this wave 1 is, as long as wave 5 is going to be longer than wave 3, which is our next assumption, then it is absolutely valid, especially if everything is moving correctively. So really, we don't have any bearish confirmation to the downside unless we start breaking these two levels here. The first confirmation is going to be here, but that still puts us into the other exhaustion of other patterns where we may be seeing that possible expanded flat idea. So if that is the case, we still have to be working within those ideas. So that's how you have to be simple. Don't work upon your emotions and your personal bias too much, which is absolutely fine. There's nothing wrong with that, but you can't just go out and say that these are entirely invalidated structures. Now, are they rare on the micro timeframes? Sure, they can be, but does that make enough of a justification to work against this possible protected low of a larger degree, parent degree, wave 4? So that's something to keep in mind. Now, I do believe that we could have the possibility of creating the subwave 5, which is going to be longer than this wave 3, and then we'll get that similar type of larger 1-2 pullback, and then we're going to be moving to the upside. So this is going to be a larger accumulated range. I'm still separating this whole range here as a completed move. So this here is still on my radar. I do believe that because we are still creating a lot of corrective overlaps within the structure here and we haven't broken this immediate support, maybe we will break it within the next few days. Who knows? But it's still valid until it isn't. So with that being said, I am now also seeing the possibility where I don't agree with the bulls, where we may be seeing another possible wave Y to the downside, where you may be seeing this as a wave ABC to the downside and creating a larger wave Y, and you may see this level of support. That's where I don't agree with the bulls. So with that being said, I do agree with the bears that this may be a completed structure for a primary wave 2, where we did hit the least common target of the 61.8%. The next common target, of course, is always going to be the most common target, rather, is going to be the 100%. And the 161.8% in terms of the partner leg extensions with in regards to this wave W or wave A, depending on how you're seeing it. But again, if you're seeing this as 61.8% rejection, this may be a good time where we may be starting to finally looking for a possible wave 1, 2, and then 3, 4, 5 continuation to the downside. But again, that's still too early. We don't have any confirmations within that. So I would agree with the bears in this sense, although I don't agree with this possible micro time frame idea of a larger or expanded leading diagonal here that's been created. We can also have the idea where this may be a double 1, 2. We can replace that wave A and B as a possible wave 2, where we still replace this idea or utilize that same idea rather as the expanded flat idea, where we take, instead of that wave X or wave B, we take this as a 1, 2, 1, 2, and then this is going to be the entire 1 through 3, 4, 5 extension to the downside, where this is wave 1, 2, 3, 4, 5 respectively to the downside. So that's how I'm currently seeing the current market situation, ladies and gentlemen. Nothing too much to update in terms of how we're seeing the markets. So that's where I kind of make that ultimate shift in terms of how we're going to be working with the sentiment. We're either extremely bullish or we're extremely bearish. I don't think there's any in-betweens where we may be seeing a possible WXY where we get supported within this region and then we move up, because I don't see how that's the markets are looking at that termination point as a specific wave 4. So hopefully that was helpful, ladies and gentlemen. I will see you guys in the next video. Thank you very much. Bye-bye.